Hey guys, short video update on my portfolio. So I need some cash to invest in some things and also living expenses. The question is, do I take it from crypto or Tesla? I invested 52% of my portfolio into crypto around the low of 180 billion. In the meantime, crypto has gone up to about 230 billion in the last month. And Tesla also went up in the meantime from maybe $400 to $500 an hour. And as a result, I still have 52% crypto today and 48% Tesla. I was thinking of selling some crypto to pay for these expenses, but it's not the right strategy because crypto just went up a lot, you could say. Bitcoin Cash and Ethereum from around $130 Ethereum to about $160, Bitcoin Cash from around $180 or $190 to about $260. That's of course in a month's time a great pump, but it's the long-term strategy here that I'm doing, and I've done this so many times wrong. That is, you buy an investment and you're sitting on quick gains and you want to lock in some. That's the temptation. But it's really a big mistake to sell crypto today, for example, because 230 billion is still like 25% of the all-time high. The all-time high was 800 billion, 850 billion 2 years ago. It is very likely we will go there and beyond. And yes, I do give it 66% probability. We will first test the bottom around 100 billion, and so we will be cut in two from here. I give that a 66% chance, but that's still a 34% chance. I give it also that it won't happen and we go up from here, or we make a correction but we don't go so low, and so my buy targets are not hit. And I had it in 2013. I invested first 10% when I entered crypto. That was too little, around $10 Bitcoin. Then you had the first bubble, you could say, or boom bust to about $250. Then it corrected to $50. Then we are back at $100, and then I was around 20% exposure. Why? Because, well, actually I went to about 50% exposure. I did some selling, good selling, profit locking, but due to that I was only at 20% exposure because I really did not expect in the middle of 2013, after we just had a bubble, that we would have another bubble within months going from $100 to $1,000. I thought that was very unlikely. Looking at the history of Bitcoin at the time, we only had a bubble in 2011, and then it took 2012 to correct, and 2013 we had another bubble. So I thought, okay, it's likely we will get another bubble, but not immediately. It's going to take another year, 2 years. And those were the odds also. And I was wrong. It just pumped from $100 to $1,000. And yes, I had met someone who had predicted that. He really said that would happen, but I had thought deep about that. I said, yes, it's possible and not likely, so I'm not gonna bet big on that. So that's why I was only 20%, and that cost me a lot in missed opportunity, because it went like that. What were my other investments at the time? It was gold and stock index and even cash, and I only had 20% crypto, Bitcoin at the time, and that was what performed, and the other ones not. Actually, the other ones were already in a bear market in 2012. Gold peaked out at 2011, so I made losses there. So it was really the wrong allocation, and if I would have thought more from a risk-reward perspective, I would have seen that also, like, yeah, okay, the chance is low we get another bubble here for Bitcoin, but if we do, the risk reward is a lot better there than for example gold, where I thought we were still in a bull market. But even if you are in a bull market, the risk reward is actually not so good at all. So it's very important to think about that. And today Yes, I think it's most likely we test the bottom, but there is still quite a big chance at 34% I estimate we don't go to those lows, and that means that the risk reward in that scenario is tremendous. Huh? Like Ethereum, Bitcoin Cash right now, $260. Yeah, okay, just went up a lot, you could say, but it's still $260. The all-time high was $4,000. It's not, even if we pump to $1,000 for Bitcoin Cash, you're still only at 25% of the all-time high. Or Ethereum under $60. Okay, that's nice, but the all-time high was 1,160. Like, so you can see that crypto is seriously undervalued. If you look at the logarithmic regression, the Trollo chart, we are at an undervaluation because in the meantime, this trend line goes up, and we're now not at 380 billion, we're at 410 billion. 1 month later, this thing goes up fast, meaning that we are still at about 42% undervaluation today. That is called, in my book, serious undervaluation. So crypto is still seriously undervalued. And so I really don't think it's wise of me to lock in profits for expenses. Even for expenses, what I should do is just take some more margin loan on my Tesla, and also protect that, of course, with a stop loss there. Because I take more margin loan, does that cost me a missed opportunity if crypto goes up? No. Does that cost me a missed opportunity if Tesla goes up? No. It's a margin loan. I just go short dollars. And that's in general a good thing to do, because it only goes down in value in the long term. So yeah, I thought it was interesting to share, because I really think that's the right strategy when it comes to crypto. You have to buy during a bear market, but you also have to refuse to sell, and you have to refuse to try to play the markets, because it's tempting. You always think like, I can make some extra money in this swing. It's likely crypto goes down, like, and gonna hit that bottom, so why not lock in some profits in crypto, get some cash on the sideline, and maybe buy it back cheaper. But this is really not worth it because of the huge cost in missed opportunity if it does not play out. Same for Tesla. Tesla pumped hard to $550. I'm very surprised to see how intelligent people, like for example Chris Dunn, has a great YouTube channel about investing. Just did a show on it with some other people, and they are laughing with Tesla. They think it's has gone parabolic too much, it's overvalued and likely to correct, and you should not invest in it. And I would agree, now you should not invest in it. But to think that it's likely to correct and that it's a hyped stock, it's really not the case. People are still underestimating this stock, Tesla, as they do with crypto also. People. And actually, that's not the case. Like, if you look in the markets, people like, for example, Chris Dunn, the way they, and actually I have very high regard for Chris Dunn. If you look at his calls over this, because he started quite early, also 2013, talking about crypto on YouTube. If you look at his calls, they have been very good. So I have great respect for him. He's a very diversified investor, very knowledgeable about different areas of investing. But I'm surprised actually to see his perspectives lately, because when it comes to crypto, he's bullish. Actually, what he says is that we're in a bear market right now. So if you look at this recent video, I will link them below. I'm actually quite surprised. He says that we had a bull market in 2019 when it went from 3,000 to 14,000, and then after that, when we broke some moving averages, we started a bear market around 10K. And so now we're in a bear market, he says, for crypto. I think this is really wrong analysis. And he says very clearly in the video, it's super important to know where you are. Are you in a bull market or a bear market? It's indeed super important. And he does this wrong, the analysis of it, because his conclusion with the indicators he uses is that we're today in a bear market of crypto, and this could not be further from the truth. We will only be proven to be in a bear market if we break the low of 100 billion and 3,000 for Bitcoin BTC and $70 for Bitcoin Cash and $70 for Ethereum. Those are the lows. Only when we break those, we can say, actually today we were indeed still in a bear market. And the odds for that are low. And I think most people would agree with that the odds are low. Still, they call today crypto a bear market. So when it comes to crypto, we are very likely in a bull market. That's very important to realize, because that means indeed you should not be locking in small gains in an early stage of a bull market. It's really not the right strategy. But at the same time, he's talking about that the halving will be putting positive pressure, buying pressure, or will reduce the supply of mined coins, and therefore put a positive price pressure on the price. So he says it's a bear market, but at the same time he believes the halving may change that and push it upwards. And I'm disappointed in such a view from him, because I think he can do a lot better. To see, it's so easy to see that the halving, like this inflation rate of Bitcoin is very low already today. So if you cut that inflation rate that is already very low in half, well, it doesn't make much of a difference. But he should also know that this supply is very low, the miner supply, compared to the total supply that is set by investors. So it all depends on the investors, whether they feel bullish and put buy pressure, or feel bearish and put sell pressure. It all depends on that. So I wanted to say that. And then also interesting, he made a tweet laughing with the coins that want to be Bitcoin. I think that's also interesting to see, and you see often from mainstream investors, like he's more like a global investor, the big investors that look at crypto still think that Bitcoin core is Bitcoin, and that's really also shows a lack of fundamental research, because if you've been in crypto and you started using crypto, you were attracted to crypto in the early days, you know that the attraction was that, wow, it's so easy to use. You can just send Bitcoin to anyone, a very small amount, costs you nothing in transaction fee, arrives immediately, and is like 99.999% certain to confirm. That's really what the attraction was, and also the ideology behind it, like that it cannot be. Nobody can control your transactions, and you also have no counterparty risk. You can store it yourself. Like when you receive Bitcoin in your wallet, actually it is really yours. Nobody else is owning it for you. So you have no counterparty risk and also no censorship because of it. Because the moment you have counterparty, someone else stores your coins, you can also apply censorship easily, like they do with bank accounts. Like, yes, you don't owe the money yourself, but it also means that any judge can, with a single signature, block your accounts. If they don't like what you do, they can just close your accounts and even block your money and hold your money hostage. That's censorship. So that those are all the great innovations of Bitcoin, and to see that someone like Chris Dunn is laughing with the other coins that have forked off Bitcoin, it's disappointing, because the way Bitcoin works today is very different. It doesn't work like Bitcoin in the early days anymore. It's not cheap to send a transaction. It's not certain to confirm. And because of it, you have other things that are being built now that actually work better. If you want to send Bitcoin, well, it's cheaply. It's better to use this new wallet. What is it? Vision of Satoshi, or Satoshi's Vision, which is a wallet built on the Lightning Network, but it's a custodial wallet, because otherwise it wouldn't work well. And so basically, you use this, you have cheap transaction gain of Bitcoin, but you lose it. You have counterparty risk, because it's like with an exchange. Actually, you don't really own the coins. The wallet of Satoshi is actually someone else owns your coins and gives you access to it. And therefore, it can be censored also. And so you see that many people Just the broad investors don't know that yet, like Chris Dunn, but also, for example, Cathy Wood, who is also very positive about Tesla and many industries, but also about crypto and Bitcoin. These people just invest in Bitcoin Core because they don't see all that yet. But that will all be come clear as the second stage of the bull market plays out. You will see that the bigger coins will likely pump a lot versus Bitcoin Core, and it will again be shocking, just like in 2017, where it was shocking that how can they pump so much, even compared to Bitcoin Core? How can Bitcoin Core lose so much market share? Like, it was a shock, but for the wise observer, it was clear why. And the wise observers, there are a lot of wise observers that just have not digged deeply into crypto yet, and they think Bitcoin Core is the leader, and due to network effects, it's very unlikely others will win. But they haven't really studied the market in depth, and they will do so, very likely, the moment they see anomalies in price performance, which is likely to happen. So I'm sitting very good on the Ethereum and Bitcoin Cash, and I think Bitcoin Cash pumped a little bit, Ethereum very little. Like, it's still an amazing opportunity, Ethereum, at current prices. And I'm very happy I succeed in going to a majority exposure. And I'm certainly not going to ruin that by locking in some small gains. Yeah, in the same show, I forgot to say something. They were talking about gold, and bullish about gold is disappointing. I will link the tweet below, a chart of the long-term returns of gold. And after inflation, after deducting 5% of real true inflation, and you get it's a clear trends where you see that yes, gold can have for a decade 10 to even 20% returns after inflation. But the same for stocks, can have 10% after inflation real returns. But there is clearly an inversely correlated pattern there, and it shifts every 3 decades. And you can see clearly that gold is on a downward trend, and today has about 0% returns in the last decade. Average returns after real inflation, whereas stocks have about or maybe 4%, something like 5% real returns, and stocks the same, maybe a little bit higher, 7-8% real returns after inflation. But gold is clearly in a downtrend, and will likely continue to go down in real returns and bottom out at a loss of about 10% per year after real inflation. For the next 10 to 20 years. And inversely, stocks will likely peak out at real returns of about 20% per year. The next go up to that over the next 10 years, 20 years. And there are so many other indicators that show that it is very unlikely that gold and commodities go into a new bull market. First of all, it's only 10 years ago that there was a bull market for commodities and gold, and it has never happened in history that there was only a break of 10 years before a new commodity bull market started, at least not the last 100 years. There's always like 20, 30 years in between, but also there's a reason why a bull market starts in gold and commodities, and it's because of a shortage, supply-demand curve. And what you typically see is that at the end of the bear market in commodities, is that prices have become so cheap for gold and other commodities that the production, instead of going up, which usually always goes up, the amount of gold produced per year starts to actually go down. And this is a rare occurrence, only happens every 30 years for a couple of years, where the actual production goes down. And that in the past has always been preceding the start of a bull market. So it's only once the supply gets cut that that you are at the final stage of a commodity bear market, where it has become so bad that even the biggest producers who have been able to survive the bear market till the end, because all small producers have gone broke by that time, also decide to cut production, and that means that they are actually closing business. They are starting to close business. And it takes a couple of years of declining production before actually there is an actual true shortage in the market, as demand always slowly goes up, usually supply also, but because supply gets cut and demand continues to go up, you actually have a real shortage, and that initiates the next bull market of commodities and gold. And we have not seen this clearly, also not for other commodities like uranium. And so it is very, very unlikely that we get a new bull market in gold, and this is very likely, therefore, a rebound. Such like with gold had a bull market from the 70s till the 80s, 1970 to 1980, but it also had a rebound, a strong rebound in 1985. After 5 years going down a lot, it went up for 2-3 years, but it never breached the all-time high. And after that, it went down for another 15 years. So this is very likely the case with gold and commodities. So to be bullish there because it has gone up a little is really misguided. And also, Chris Dunn can do a lot better than that, in my opinion. Yeah, and a little bit more on Tesla, because they were laughing with the gains, like the 100% gain in only 3 months is too much, they say, and you should look at other stocks, but it's doubling. Yes, that was fast, but look at the past 5 years. It's just double the price of what it has been the last past years. Well, around $300 the last 5 years, and now it's $500. So it doubled, or it was around. So it's really not a great performance, actually, considering that in those past 5 years, with the exception of 2019, the last year, it has really like increased its revenues by about 80% per year. A tremendous growth in a declining market. Auto market is actually declining the amount of cars sold, but yet they grow exponentially. But most importantly, how often do you see a unicorn? Are you able to invest in a unicorn, meaning a company, a public company that does 100x after it's quoted publicly? You don't have many of those. You have had Apple, you have had Amazon, Microsoft in the 90s. There are a few companies, but you can count them on one hand. Facebook, maybe. Although Facebook launched on the public markets much too late, probably, to get such returns. So it is a rare thing, and if you have a chance to invest in a company that is going to take over an industry, which is very rare, that is a great investment. Even if it just doubled, and the past 5 years it has doubled, that's still a great investment. So Tesla cannot be compared with an average stock, because it is clearly taking over a very big market, revolutionizing it, and the competitors are not able to catch up. It's not like Ford or GM or Volkswagen is gaining any market share in the electrical vehicle industry. No, they're struggling, and their businesses are really doing bad, very bad. And this is also an extra that you can see at a later stage. There are so many positives about Tesla, but the extra that's never mentioned is that when a competitor goes broke and stops producing a lot of cars, that actually is also great, very good for the ones that survive. And this is like a thing that also is going to happen, not the next 2 years, but the next 5 to 10 years. Very likely some of these big car manufacturers will go broke, and all the cars they produce, they will stop producing, and so the people will be forced to buy from the survivors. So that's it. Thanks for watching.